Assalamualaikum warahmatullahi wabarakatuh. We are Group 4 from Bkaf 1023, Introduction to Financial Accounting, Group N. Today we would like to present annual report comparison for the year ended December 31, 2022 for TRANSOCEAN Holding BERHAD and TOMEI Consolidated BERHAD. This group contains 5 members, which is Nurul Auni Nadira binti Zakaria 293601, Nur Akilah Ahmad Latif 293152, Akilah Najibah binti Mat Rusli 293547, Majida binti Azmi 292571, and Nurul Aina Najwa binti Ahmad Hisam 292922. This video contains with 6 sections, which is introduction, liquidity ratios, activity ratios, profitability ratios, leverage ratios, and conclusion. TOMEI Consolidated BERHAD was founded in 1968 as an established jewellery designer and manufacturer listed on Bursa Malaysia. The late Tan Sri Dato Dr. Ng Tek Fong had just returned from studying abroad and decided to build a jewellery company. He took a number of cutting-edge moves to launch a jewellery company under the name TOMEI in order to become a leader in jewellery industry. The word TOMEI means an abundance of beauty when it's translated from Chinese to English, which truly captures TOMEI's commitment then and still to create stunning and timeless jewellery works. He broke down barriers by importing a carving machine from Japan to meet with worldwide standard and supply it to other merchants, goldsmiths. This moment shown that the brand was more than a simply jewellery brand and that it was a successful corporate company that was open to trying new things and continuously innovating to stay current. TOMEI's first owned retail was in early 1970s in Campbell Shopping Complex in Kuala Lumpur and later subsequently grows into an integrated jewellery manufacturer and retailer of gold and jewelleries in Malaysia. TOMEI's retail outlet was under 4 names, which is TOMEI, Goldheart, Lee Lumiere, and De Beers. Every year, TOMEI Group introduces new designs and items to the market, including some of its iconic designs like the Anastasia and Chomel for gold jewellery, internal binding for diamond jewellery. Additionally, the group obtained the rights to act as the sole distributor for Prima Gold in Thailand, Jifu Jewellery and Beta Jewellery from China. The group also has permission from Sanrio to produce and market gold jewellery in Malaysia based on Hello Kitty character for the children's market. These moves give advantages to the company to expand their sales target among toddlers, teenagers, and adults. TOMEI had been selling its item on a number of multi-channel platforms and actively advertising them in social media. This demonstrates the brand's commitment to adjusting and remaining relevant regardless of setting and circumstances. TRANSOCEAN Holding BERHAD is a diversified group with business in logistics, tire manufacturing, and information technology. The company's logistics division offers services throughout Malaysia, Singapore, and Thailand: trucking, cross-border services, containers haulage, containers report, storage, freight forwarding, custom brokerage, and others. The group's tire division specializes in trading new tires and retrading tires. Since its founding in Penang in 1977, the group has been regarded as a pioneer in logistic operation in the northern area. It begins as a specialized brokerage agency for Penang-based manufacturers and traders before growing to include trucks, hauling, and warehousing. Datuk Syed Budris Putra was appointed as the non-independent non-executive chairman of the company and does not serve on any board committee. He is deemed to have interest as an substantial shareholder of the company by the virtue of his interest held through and phrase consulting Sendiri and BERHAD. Encik Ibrahim Aiman bin Muhammad Nazmi was appointed as the executive director of the company. They become the main parts in the company to handle and control the movement of the group's activities. The group is currently operating with three major divisions, namely Logistics Division, Tire Division, and Information Technology Division. The multiple services under Logistics Divisions are currently being performed by the following four companies, which is TRANSOCEAN Logistics Sdn Bhd, TRANSOCEAN Freight Service, TRANSOCEAN Distribution, and Gerak Incentive Sdn Bhd. Trucking, freight forwarding, custom brokerage, and container depot are among the services offered by TRANSOCEAN Logistics. TRANSOCEAN Freight Service offers services such collecting loose cargo, repacking into palletized form, and custom clearing for both Singapore's and Malaysian customs. TRANSOCEAN Distribution Hub offers a comprehensive range of warehousing services, including storage handling, labeling, repackaging, cross-docking, and distributions. Gerak Intensive offers haulage services to the market as well as non-related delivery, point-to-point delivery, service for cross-boarding, container transporting commodities from Thailand to Malaysia. Usmeta Manufacturing, collecting the collection of branded used tire casing for consumers, was the first step in the production process. Before being placed into curing chambers to cure, the used tire casing is put through a process of quality inspection, repair, polishing, and cementing with new pre-cured line. In Freight Solutions, Sdn Bhd is under Information Technology Division.
Hi, today I would like to discuss about the liquidity ratio. A crucial group of a financial metric known as a liquidity ratio is used to assess a debtor's capacity to settle current debt obligation without the need of outside funding. By calculating metrics like the current ratio, quick ratio, and the cash flow ratio, liquidity ratio can also gauge a company's capacity to meet debt obligation and its margin safety. However, we will only discuss two parts of this liquidity ratio, which are the current ratio and the quick ratio of our two selected companies. The current ratio evaluates the company's capacity to cover its total current asset, which include cash, account receivable, and inventories with respect to its current liability due within a year. The better the ratio, the more liquid the company is. And the formula for this current ratio is the current assets divided by the current liability. Meanwhile, the quick ratio assesses a company's liquidity by determining how well its current asset can cover its current liabilities. The quick ratio, on the other hand, is a more conservative measure of liquidity because it does not include all of the items in the current ratio. The quick ratio, also known as the acid test ratio, only includes assets that can be converted to cash in 90 days or less. The formula for this quick ratio is the quick asset divided by the current liabilities. Based on the ratio calculated, TRANSOCEAN Holding Berhad has a better current ratio than TOMEI Consolidated Berhad, where the ratio difference is 0.1. Besides, we are able to conclude that both of these companies have enough assets to cover up their liabilities since the current ratio are both greater than 1. This is a good sign for TRANSOCEAN Holding and TOMEI Consolidated Berhad, where both of these companies are considered less of a risk because it could liquidate its current assets more easily to pay down their short-term liabilities. Next is for the quick ratio. As we can clearly see, the quick ratio of the TRANSOCEAN Holdings Berhad is higher, which is 0.89 compared to the TOMEI Consolidated Berhad, which is 0.36. We can assume that TRANSOCEAN Holdings Berhad has the ability to pay off its current liabilities in the short term, but it is not particularly efficient because the ratio is still below 1. Meanwhile, TOMEI Consolidated Berhad may not be able to entirely pay off its current debts in the short term. Therefore, both of these companies should look for ways to improve their quick ratio by increasing sales and inventory turnover. The companies are also advised to pay short-term liabilities quickly to put their business in a better position.
Activity ratio. An activity ratio is a sort of financial indicator that measures how well a firm leverages its balance sheet assets to create revenue and cash. Activity ratios, also known as efficiency ratios, assist analysis in determining how a firm handles inventory management, which is critical to its operational fluidity and overall economic health. Economy activity ratios can be classified into a few of the following, which is account receivable turnover, merchandise inventory turnover, total assets turnover, return on equity, and assets turnover. So, by the following categories, we are only going to discuss about two categories, which is the total asset turnover and account receivable turnover. The total asset turnover ratio assesses how well a company utilizes its assets to make a sale. Total revenue are divided by total assets to determine how well a company uses its assets. So it means that smaller ratio may suggest that a corporation is having difficulty moving its items. Next is the account receivable turnover ratio, measures a company's ability to collect money from consumers. Total credit sales for a given time are divided by the average accounts receivable amount. A low ratio indicates a problem with the collecting procedure. The computation shows that TRANSOCEAN Holdings BERHAD has a higher total asset turnover than TOMEI Consolidated BERHAD. TRANSOCEAN Holdings BERHAD is 0.7 times bigger than TOMEI Consolidated BERHAD. TRANSOCEAN Holdings BERHAD is demonstrated to be more effective than TOMEI Consolidated BERHAD. This is due to the possibility that the lower percentage indicate TOMEI Consolidated BERHAD is having problems moving its goods. A low assets turnover ratio in general indicates problem with excess manufacturing capacity, improved inventory management, and ineffective tax collection techniques. According to the calculation, TOMEI Consolidated BERHAD has a far higher account receivable turnover than TRANSOCEAN Holdings BERHAD, which is 4.47 times and 1883 times. This demonstrates how much more effective TOMEI Consolidated BERHAD is at collecting money. In order of that, TRANSOCEAN Holdings BERHAD needs to increase their account receivable turnover by invoice accurately, promptly, and frequently in such instances. Okay, so accurate and comprehensive bills are the easiest for customers to pay, but it's as important to send bills out frequently and on time. Businesses that issue late invoices run the risk of developing a reputation for accepting late payments.
Now I will explain about profitability ratios. Profitability ratios are a class of financial metrics that are used to assess a business' ability to generate earnings relative to its revenue, operating costs, balance sheet assets, or shareholders' equity over time, using data from a specific point in time. There are two types of profitability ratios. First, profit margin on sales. The profit margin is a ratio of a company's profit, sales minus all expenses, divided by its revenue. The profit margin ratio compares profit to sales and tells you how well the company handling its finance overall. It's always expressed as a percentage. The formula of a profit margin on sales is net income divided net sales. Second, return on assets. The use of the term return in the ROA measure customarily refers to net profit or net income, the value of earnings from sales after all costs, expenses, and taxes. ROA is net income divided by total assets. The more assets a company has amassed, the more sales and potential profits the company may generate. The formula of the return on assets is net income divided average total assets. We'll move to the calculation of profit margin on sales. First company is TRANSOCEAN Holdings BERHAD and second company is TOMEI Consolidated BERHAD. Based on the calculation, the percentage of profit margin on sales for TRANSOCEAN Holdings BERHAD is higher at 5.9% compared to 4.5% for TOMEI Consolidated BERHAD. The difference in the percentage of the profit margin on sales is 1.4%. The higher margin is better than lower margin because it means that the company can translate more of its sales into profit at the end of the period. It shows TRANSOCEAN Holdings BERHAD management ability to generate a better profit from its sale. We interpret about return on assets ratio. TRANSOCEAN Holdings BERHAD got 7%, meanwhile TOMEI Consolidated BERHAD got 3.6%. On the calculation, the percentage of return on assets ratio obviously shows that TRANSOCEAN Holdings BERHAD is better than TOMEI Consolidated BERHAD. The ratio of TRANSOCEAN Holdings BERHAD is higher at 7% compared to TOMEI Consolidated BERHAD 3.6%. A higher ratio is better. TRANSOCEAN Holdings BERHAD is more favorable because it presents that the company is more effective at managing its assets to produce greater amounts of net income. Doesn't mean the TOMEI Consolidated BERHAD is not performing in managing their assets, but it's quite low.
Leverage ratios. Leverage ratios are financial ratios that measure a company's financial stability using its capital structure, financial obligation, and its ability to clear those obligations. The investor, board of directors, creditors, and others measure the financial aptitude of the company using these ratios. Leverage ratios divided into two. First, debt to asset ratio. The debt to asset ratio is a leverage ratio that measures the amount of total assets that are financed by creditors instead of investors. The formula is total liabilities divided by total assets. Second is debt to equity ratios. The debt to equity ratios is the financial liquidity ratios that compares a company's total debt to total equity. The formula is total debt divided by owner's equity. According to the data we have calculated, the debt to assets ratio in TRANSOCEAN Holdings BERHAD is 13.4% compared to TOMEI Consolidated BERHAD is 50.4%. Companies with higher levels of liabilities compared with assets are considered highly leveraged and riskier for lenders. Therefore, it shows TOMEI Consolidated BERHAD has taken on a larger amount of risk than TRANSOCEAN Holdings BERHAD. Next, according to the calculation, TRANSOCEAN Holdings BERHAD will have a lower debt equity ratio, which is 15.6% compared to TOMEI Consolidated BERHAD, which is 89.8%. Lenders and investors usually prefer low debt to equity ratios because their interests are better protected in the event of a business decline. Hence, it shows that TRANSOCEAN Holdings BERHAD is most favorable because it has lower debt equity than TOMEI Consolidated BERHAD.
Based on the calculation and analysis that has been made, we would like to include that the result of TRANSOCEAN Holdings BERHAD is way better than TOMEI Consolidated BERHAD. TOMEI Consolidated BERHAD's liquidity ratio will be lower overall than TRANSOCEAN Holdings BERHAD. This is primarily impacted by higher assets and lower current liabilities and inventories because it could more readily sell its current asset to pay liabilities and debt. This demonstrates the corporation was less risky. TRANSOCEAN Holdings BERHAD is 0.7 times larger than TOMEI Consolidated BERHAD because they good at collecting their money compared to TRANSOCEAN Holdings BERHAD. So TRANSOCEAN Holdings BERHAD need to think a best method to increase their account receivable turnover. TRANSOCEAN Holding Berhad has a greater profit margin percentage on sales than TOMEI Consolidated Berhad at 5.9% opposed to 4.5%. This demonstrates that TOMEI Consolidated Berhad needed to identify the best method of activities management to produce a higher profit for the business. TRANSOCEAN Holding Berhad has a lower debt to asset ratio than TOMEI Consolidated Berhad, which is 50.4%. This demonstrated that the need of TOMEI Consolidated Berhad to control its debt if they wants to attract investors and lenders to invest in their business. Conclusion: both businesses must enhance their management in order to ensure that their profit can increase in comparison to the prior year. If they are to get back on track, they can also act on their own initiative to develop long-term business profit plan. Additionally, they can promote their offers in their own page or official account by increasing their advertising on social media platforms. They might form a partnership to spread the risk and boost their efficiency while gaining more ownership for the project they manage, for a steady image, and to win stakeholders' trust, increase equity and assets.